on, guys? It's Mike Evans, your favorite equity research analyst. I'm back at it again with another REIT analysis video. Today we're going to take a look at a unique REIT that I found using the screener that I put together. If you guys didn't see the video that I posted up 2 videos ago, I kind of gave a rundown on how I find these REITs and how I kind of start doing my analysis on them for the reports that I put together. But I found a REIT probably about last spring. I've been following this company for some time. It's called MacKenzie Realty Capital. And I want to break down my analysis of the REIT, kind of give you guys a overview on what the company does, my valuations for the company, and just sharing a little bit more insights in terms of catalysts that are coming up, and just again my supporting details to get me to where I think the company is going. So I'm just gonna jump right in. Again, the company is called MacKenzie Realty Capital Inc. and just a little bit about what the company does. So it is a REIT, and again, it's a real estate investment trust, and it specifically focuses in multifamily and has like a sprinkle of offices in their portfolio as well too. One of the things that I find very, very unique about this company is that it also allocates a certain part of its company to focus on other real estate investment companies. So I'm just gonna head over to the website. So they focus on so about 80% of the company focuses on the physical assets like the multifamilies and the offices, and then about 20% of the company actually focuses on non-traded REITs is what they call it. So they essentially essentially they focus on investing in non-traded REITs, even though I have seen some other investments that the company has made for publicly traded REITs, which I'll go a little bit further into in just a moment. So in a very general sense, it's a REIT. They're located in California. I believe they own about 11 different properties. So if we head over to their website, just kind of goes over some of the assets that they own. So Aurora at Green Valley is a new build that they actually just put together. I believe it finished in 2025. And I was blessed enough to go to the property. It is like a Class A, higher upper scale sort of property. Beautiful layout, and I believe earlier this year they just announced that they're 100% leased. So you got about 72 units there. They also own properties throughout other areas in California. So the Hollywood Apartments is another asset that they own. Shoreline Apartments. They got the Commodore Apartments and the Parkview Apartments as well too. So this is this is the physical part of the company. And actually earlier this year they split off the apartment section of the company, and they renamed it MacKenzie Apartment Communities. So it's like its own standalone division of the company. And the MacKenzie Realty Capital aspect of the company, that's where they do the other acquisitions and investing. So I thought that was very unique and smart for them to kind of split off the two parts of the company, just so if when need be, if they wanted to sell that whatever parts of the company, they can do it pretty seamlessly. So in a nutshell, that's essentially what the company does. They invest in physical assets, and then they also have a portion of the company where they invest in non-traded REITs. So if we head over to FinViz, just to kind of go over some of the numbers here. So as you can see, the company is not profitable. They are losing money. They have pretty decent insider ownership, just at about 30% is of the insiders own the company, which is pretty good. They have a pretty small float at about 1.6 million. They don't have much shorted interest in the company, which is good. And and they've been performing pretty bad year to date. So if you take a look here, they're down about 64% year to date. So if you, even just looking at the chart, you would have lost a lot of money if you had invested in the company when they had IPO'd last year. However, the chart doesn't tell you the full story of the company. So again, which is why I wanted to do this video to kind of break down some other aspects to take a look at while considering if this is a worthwhile investment. And again, before I even go even further, this is not investment advice. Please still do your own due diligence. I'm just giving you guys like my own analysis and research based off of what I've been seeing. Okay, so one of the biggest things I wanted to highlight is their price to book. They do have a lot of assets on their balance sheets, and they do also have a lot of debt. However, if you let me just head over to the 10Q. Oops. Okay, so here's the following here. So if we take a look at the balance sheet, the total assets that they have is 239 million. So with about 214 million being real estate, the liquidity is pretty low based off of their recent earnings. They have about 4 million in liquidity, which at their burn rate, I'm not sure how they're going to sustain that. I'm pretty sure they're probably going to have to dilute a little bit more or borrow a little bit more just to kind of keep the operations going. But if we're just looking at the total assets based off of what they're pegging it at, we've got about 239 million. And then for the liabilities, we have 154 million. So if we just do basic maths, take the assets, subtract the liabilities, we're looking at about 85 million and in equity. So with the shares outstanding, if you divide that up, you're looking at roughly at about $23 for the book value. So that's one metric you can use. At the end of the video, I'll kind of give you my number where I think the company is worth about. And then we'll head over to the chart again. I'm looking at this is the monthly chart that I have up here, and we've got RSI sitting at about 11, and it looks like it's been in the deep oversold territory for basically almost a year now. Yeah, so almost a year. So if we look at maybe like the daily chart, kind of get a little bit more insight there. It did drop slightly below $1 earlier this month, towards the end of last month, and it hit that trend line, which is not a bullish trend line. Looks like it's just on a downward. But it did hit that trend line pretty good, and it bounced up. So that was probably about like almost an 80, almost 100% move if you were able to catch that super low. So right now RSI is sitting at about 46. It looks like it is sitting above a moving average. Looks like that's the 20-day, and then right above that is the 200-day moving average. So as long as it holds that 20-day and tries to break above that 200, that'll be some good news. There was some high buying interest here in August, I believe. If you scroll down here, I believe that was the insider purchases. So it looks like the CEO has been purchasing some shares over the past couple of weeks. Looks like he put about 40 grand in there, another 16 grand. Other insiders have been buying as well too, to the same tune of the dollar amount. So yeah, insiders have been buying, which that is pretty bullish in my opinion. And again, the most recent transactions really started towards the end of July. So just moving right along, gonna head over to some other catalysts in the company. So Earlier, I mentioned that the company has like two divisions. Essentially, it's the physical real estate aspect, and then they also have their non-traded REIT investment aspect, or traded REIT aspects in this case. So just want to hop over to kind of share with you some of the non-traded REITs and REITs that the company has been investing in. So as of last year, there has been other catalysts that the company has been releasing, mentioning that they are offering liquidity to investors to tender their non-traded REIT shares. And one of the companies that they have issued those tender offers is Starwood Real Estate Income Trust. So that's also obviously another REIT, and they have managed to get some tender offers at about a 22% discount. Currently, right now, if we head over to their balance sheet, just pull that up here. They do have a couple of different non-traded REITs on their balance sheet. So if we head over to their investment aspects on their balance sheet, they do have about, currently right now, based off of their most recent quarterly earnings, they have about $3.2 million worth of Starwood Real Estate Investment Trust on their balance sheets. And currently, right now, based off of one of their earnings release, they're valuing Starwood's shares at about almost $21 per share. So at the discounts that they've been getting it, you're looking at about a 22% upside there, just based off of the discounts that they've been getting the Starwood shares at the tender price. Another this one's public, but another REIT that they have been investing in, and this one's actually more recent news, is the company National Healthcare Properties. So currently, right now, they're actually publicly trading at about $16. Let me just take a look here. I just saw it recently. They're trading at about, yeah, so they're almost $17. So just about $17. They were able to get this is the part that I find very unique about the company. They were able to secure a loan to purchase these shares. So they got $1 million loan to purchase shares at a discount at $7.27. So looks like they'll be able to freely trade these shares in October. So that's in about 2 months from now. So if you're looking at the price that they're purchasing the shares at, and what currently the market is trading at, if it stays here in October, you're looking at over 100% gain. So they'll make more than enough to pay off the carrying costs, pay back the loan, and have a nice spread for the company and its shareholders. So I find that part of the company very, very unique, that they can secure financing to find these undervalued companies, REITs, whether they're getting it at a tender offer, or just buying it at a super discount out of the money for recent developments. And again, Aurora Green Valley was one of their bigger projects where they just finished doing the leasing and the development for the company. So I do believe that the cash burn will start to decrease because of these capital intensive projects coming to completion. And then also too, earlier this year, they did release an article saying that they're looking for a strategic review to sell off their apartment division of the company. And I read somewhere it said that part of the company, they're actually looking, they believe that it's worth about $16 a share. So with the company coming out and saying that they believe that part of their company is worth about $16 per share, I find that very bullish because currently right now the stock is trading at about $1.40. And then the real estate aspect, the physical real estate aspect of the company is saying that it's worth about $16 to $18 a share. So if they're able to sell off all those properties to, I don't know, like a BlackRock or even a smaller scale real estate company, I think that'll give them the liquidity that they need to focus on other projects. It would be nice if they can focus on the REIT investing side of the company, because I think they have been doing a very well job at that. Um, so yeah, that's one aspect of the company to take a look at. So based off of this information, with the valuations of the buildings, the balance sheet that it currently has with the um, different REITs that they have on their balance sheet. Personally, with the book value being at about $22, I think the company is spot on with that $16 to $18 price range. Again, it's gonna take a lot of realization from the market to see this value. But again, based off of their strategic review for their real estate, the physical real estate side of the company, and them breaking that physical real estate side of the company into Mac, which they call it Mac. Um, if they can sell that at, heck, even at like 14, heck, even if it's $10, I think that'll give them enough relief on the capital burn, pay off a lot of its debts, and then they can focus on this side of the company where they're just focusing on investing in different real estate investment trusts. So again, my takeaway price point for the company, I think $16 is pretty spot on if they can uh, make the strategic review and sell off their assets like pretty soon. Like I'm talking like 6 to 8 months. If they can get all the properties out, they've got a pretty decently high occupancy rate. Again, their new build is at 100% occupancy rate, and a lot of their assets are in pretty decent markets as well. I know Cali has been kind of hit in certain areas post COVID, especially the office market. But as far as the new build and the other assets that they own, I think that the cap rates and the occupancy rates are high enough for them to get that that $16. And like I said, even if they can get $10, a share for that side of the company, and then utilize that additional equity or capital to pay off the remaining debts that they have, and just really focus on this sector or this niche that they're in, I think this company would do really well. So yeah, that's my take on this company. Please share your insights on it. It's a tiny company. The market cap's like 3 million, so I do not expect much people to know about this company. Again, I put together a screener to help me find these types of companies. So if you guys have any questions on the screener, or just have any feedback on my analysis, I'm open to it. This is just all research for me to share, and for myself to get better at my research. So, yeah, like, comment, and subscribe. All the links to these articles and all my previous articles, I'll keep it in the description. And thanks for watching, guys. Take care.